How do dependents affect Form W-4? Have you ever wondered how dependents can change the way taxes are taken out of your paycheck? Understanding this can make a big difference in your take-home pay. Let's break it down. Form W-4, also known as the Employee Withholding Certificate, is a form you fill out to tell your employer how much federal income tax to withhold from your paycheck. This form is crucial because it directly impacts your income throughout the year. When you have dependents, they can affect the amount of tax withheld from your pay. On Form W-4, there is a specific section called Step 3 that addresses dependents. This step is optional but can be very helpful for those with qualifying dependents. A dependent is usually a child or relative who meets certain criteria set by the Internal Revenue Service, including relationship, residency, age, and income. Claiming dependents on Form W-4 typically lowers the amount of federal income tax taken out of your paycheck. This happens because the Internal Revenue Service allows tax credits for each qualifying dependent. For instance, the child tax credit can significantly reduce your tax burden. By indicating your dependents on the W-4, you inform your employer that you plan to claim these credits when you file your annual tax return. As a result, less tax is withheld, which increases your take-home pay. However, it is important to remember that the number of dependents you list on Form W-4 does not determine your eligibility for tax credits. That eligibility is assessed when you file your annual tax return. If you claim more dependents than you qualify for, you might end up owing taxes or facing penalties later. For small businesses and payroll administrators, knowing how dependents influence Form W-4 is vital for accurate payroll processing. Employers relying on the information from the W-4 to calculate how much federal income tax to withhold from each employee's paycheck. If the information is incorrect or incomplete, it can lead to underwithholding or overwithholding. This could mean employees owe money or receive large refunds at the end of the year. Employees should review their W-4 each year or whenever their personal or financial situation changes, such as gaining or losing a dependent. The Internal Revenue Service offers a tax withholding estimator tool to help employees figure out the right amount to withhold based on their unique situation. For small businesses, it is essential that payroll staff ensure employees fill out Form W-4 accurately, especially regarding dependents. This helps avoid payroll errors and keeps everything compliant with tax regulations, benefiting both the employer and the employee when tax time arrives.